Welcome to Yahoo Finance's flagship show, The Morning Brief. I'm Julie Hyman. Let's get you the three things you need to know today. First up, U.S. stock futures little change this morning after the S&P 500 and the tech-heavy NASDAQ closed at record highs. Meanwhile, trade in focus this morning as Treasury Secretary Scott Bessent said he will meet his Chinese counterpart next week and discuss what's likely to be an extension of an August deadline for higher tariffs. That's according to an interview he gave on Fox Business. Plus, earnings season is in full swing. General Motors said it suffered a $1.1 billion profit hit from Donald Trump's tariffs and revealed no plan for a near-term fix to return to pre-tariff profit levels. In other earnings, Coca-Cola posted second quarter sales growth and profit that beat Wall Street expectations as consumers continue to pay higher prices for the company's soft drinks. The company also said it plans to launch a new Coke product for American consumers made with cane sugar this fall. And Federal Reserve Chair Jerome Powell delivering remarks this morning as pressure mounts on him. Treasury Secretary Scott Bessent called for a review of the decision to renovate the Fed building. And meanwhile, a Florida congresswoman has asked the Justice Department to consider investigating and prosecuting Powell for allegedly lying under oath in testimony before a congressional committee. Let's check on stock futures right now. We're seeing a mixed picture for the major averages in terms of where they are pointing right now. The Dow pointing to a drop at the open, but a relatively modest one. The S&P pointing to a relatively small gain at the open, and the NASDAQ pointing lower. Really, we are seeing more individual stock activity at the moment based on some of the earnings that we're getting. So let's zoom in now on the top stories of the day. First up, the S&P 500 and NASDAQ closing at new all-time highs. Will looming trade deals do anything to dent investor confidence? They haven't so far. Plus, second quarter earnings front and center with results from General Motors, Coca-Cola, and more out this morning. And Fed Chair Jay Powell making his final comments ahead of next week's policy decision as the pressure on him from the administration continues. Joining me now, senior reporters Josh Schaefer, Brooke DePalma, and Ali Canal live at the NASDAQ. Josh, we do have these new trade headlines this morning that in theory should be positive ones for the market, with Treasury Secretary Scott Bessent saying he's going to meet with Chinese counterparts in Stockholm next week, next Monday and Tuesday, to talk about further negotiating, maybe extending past an August 12th deadline. That's the different deadline for China. And, you know, if this headline had dropped maybe even a month ago, we would have seen maybe more of a positive reaction in the markets. We didn't.
Yeah, Julie, so what we're seeing this morning, it seems to be really just a continuation of a recent trend that we've sort of been following and writing a bit about over the past month or so, which is markets just aren't moving that much on trade deal headlines, on trade news, whether it be Trump sending a letter or some news like we're getting this morning. So the team over at Goldman Sachs, David Kostin and his equity strategy team, actually analyzed how the S&P 500 has been reacting to different headlines. You can see in the top there, so the S&P 500 is in green. A basket of tariff risk-related stocks is in purple. Of course, that tariff risk-related bucket had moved a lot more over the past couple of months, right? You can see that big 11% move, 11% drop on Liberation Day. But what's interesting to point out here is the bottom two categories. So tariff letters and then also other information that came out on July 13th. You saw the tariff basket only move 1% on one of those, 0% on the next one. The S&P 500 basically didn't move on either of those days either. So what we're learning right now, it seems to be, at least from what the market's telling us, is the talk of deals and sort of this abstract nature of we're not really sure what's happening is no longer moving the market. If you do think what moved the market out of China a couple of weeks ago, it was NVIDIA perhaps being cleared to sell those H20 chips again, right? Some tangible fundamental news that we can understand how it would help the company. But the high level, broad stroke, we're planning on speaking, we're maybe getting closer to a deal, that just isn't impacting the markets the way it was in April and in May.
And what's interesting, Ali, is even though it's not having an effect, many of the strategists and investors we're talking to on the shows are saying they expect that it's possible that we could see more choppiness coming up.
Yeah, and seasonality plays a factor in this. July is typically the quietest month for stocks, but we typically see some chop in August and October, and that's going to be especially true this time around with more uncertainty around trade along with the Fed. And to that point, we'll be seeing the Fed policy decision next week, and that will be immediately followed by that August 1st deadline. That's what some Wall Street strategists are referring as Liberation Day 2.0. But despite all of those unknowns, large cap companies, especially tech companies, those with AI exposure, that has done very well in this environment. And strategists say that will continue to do well in the months ahead. So this was a fun flag from DataTrack that the NASDAQ 100 actually has its own version of the VIX. It's commonly known as the VXN, and it closed Monday at just under 19. Now, this is well below its long run average of 24.7. So one strong sign of a durable tech bull market. We will hear from those Mag 7 players like Tesla and Alphabet this week. In fact, that's coming tomorrow after the bell. And then next week, we're going to have Amazon and some of those other names. And just this morning, Laura Martin from Needham, she raised her price target on Amazon to $265 a share. That's up from the prior $220. And she cited the following: strong AWS revenue growth, margin expansion in the second quarter, record-breaking Prime days in the current quarter, likely to drive upside to the outlook, and that the peak tariff woes are behind Amazon, and that Gen AI is going to help with lowering costs on the infrastructure side as well. Now, year to date, Amazon has lagged a bit compared to the broader market. It's not the worst performing Mag 7 out there. That goes to Tesla and Apple, but it is still struggling. It has a lot of competition, and it's really tied to the consumer story as well. And that's something that we're going to continue to track all earnings season, is how is the consumer holding up? Because if they stop spending, that's what's going to ultimately weigh on growth.
And speaking of resilient consumer, let's talk about Coca-Cola, Brooke, because obviously it's seen more as a staple, but Coke is discretionary. I think soda is discretionary for most people. So what are you hearing from them?
Well, I spoke to Coca-Cola CFO this morning, John Murphy, and what he really said is that overall the U.S. consumer remains resilient in this environment where they're facing tariff headwinds and they're also facing higher prices. They continue to buy, especially that Coke Zero Sugar. We continue to see growth there. In particular, he said that the lower income segment does remain under pressure, but at large, there is overall resilience in the U.S., and that continues. He said not only in the United States, but in other parts of the world, that low income consumer does still remain under pressure. And that's why when they updated their guidance, they really did keep in mind that they want to ensure that they continue to serve that lower income segment with different value options, different packaging offerings as well. And this is an ongoing narrative of not only what we heard from Coca-Cola, but also what we heard from Delta, from Levi's, and also ahead of Amazon's report as well. We do expect that U.S. consumer to remain resilient. When we hear from Amazon after market close tomorrow, largely analysts there saying that while tariff concerns were front and center in the quarter, that U.S. consumer remained resilient. They were ultimately able to push through those tariff headwinds and also keep an outlook on how exactly Amazon plays out when it comes to that competition from Temu and Shein, perhaps getting a bit quieter after those tariffs definitely took a toll on those two companies. But largely from Coca-Cola this morning, the U.S. consumer still resilient there as well.
Yeah, I mean, that said, the tariff story continues to be interesting, Brooke, because, you see Coke that seems okay, but then you see GM, which definitely saw more of an impact.
Yeah, when it comes to GM, they also said that they do expect that impact from tariffs to impact the second quarter even more so than the first quarter. Of course, we got so many of those headlines around tariffs in early April during this past second quarter report. And so there's lots of chaos, lots of noise when these companies come out with their second quarter report. But in particular, those tariff headlines do continue to put pressure on the company's bottom line. But Dan Ives saying in a note this morning from Wedbush that he believes that Mary Barra, the CEO there, continues to impressively navigate, quote unquote, the complex backdrop successfully while seeing continued high demand for their entire fleet of electric vehicles as well. And so it will be interesting to see how automakers, this big name, General Motors, really pushing through that noise when it comes to tariffs, but certainly see impact as well.
And Josh, you and I talk a lot about the so-called word searches that we like to do during these earnings conference calls. Obviously, tariffs is still on the list. But what are the other themes that that sort of started to emerge this earnings season?
Yeah, Julie. Well, I mean, Brooke mentioned resiliency, right? And I think when you talk about the consumer, that's sort of been a key one. You've also seen inflation mentions actually start to come down a little bit, which I found interesting. It's pretty early in the earnings season, but I saw one strategist tracking that. Inflation has started to come down. Recession talk has certainly cooled off the boil over the last couple years. But I think as we get further into a lot of those words I mentioned really do sort of center around the consumer, right? And we haven't really gotten a lot of consumer earnings at this point. So I think it's hard to really sort of spin exactly what the key narrative is going to be. But I do think it's interesting that we're now moving perhaps past the uncertainty phase, or at least the broad uncertainty phase of tariffs, into the, okay, we have an idea of what the tariffs are, at least generally. We know that they're going to be here. Now what's the plan, right? You and I were talking about this the other day. First quarter was sort of, okay, let's shrug our shoulders. We're not really sure what's happening here and what it's going to do for us. Well, now you should have a better idea, right? And so what is that guidance coming into the second half of the year? And then honestly, it's almost time to start talking about 2026, right? And what does it mean for the next 12 months? Because that 2026 sort of revamp in earnings growth that the market is expecting is kind of one of the key things that's been backing the rally to this point.
2026, Josh. Whew, I'm not ready for that. All right, thanks, guys. Josh, Brooke, Allie, appreciate it. Well, Goldman Sachs is eyeing new acquisitions. That's according to reporting from Semaphore. In the past year, CEO David Solomon discussed a potential takeover with Northern Trust and nearly secured a $6 billion deal with Cliffwater. Semaphore reports there's a possibility that talks with Northern Trust could reignite. That's after a recent Wall Street Journal report indicated that Bank of New York Mellon has also approached Northern Trust for a potential merger. If acquired, Northern Trust could bring Goldman $1.3 trillion in client assets. And these reports come as Goldman has hit a so-called growth wall. The bank's merger arm brokered $1 trillion of deals last year, but it's been 25 years since the firm itself bought anything of size. Back in 2016, Goldman launched a consumer banking division with the goal of diversifying revenue streams. Just 6 years later, it significantly scaled back that business after racking up billions in losses due to high expenses and rising loan losses. When asked to explain that failed foray, Solomon said on an earnings call, quote, "We tried to do too much too quickly." This latest round of acquisition talks comes as Goldman Sachs stock sits near all-time highs, up nearly 50% from a year ago. It also comes as, on a broader basis, we have seen some loosening of regulations and perhaps signals that deals could be more likely to get a green light. Coming up, we'll count you down to the opening bell on Wall Street. Don't go anywhere. You're watching Morning Brief on Yahoo Finance. Now time for some of today's top trending tickers. We're watching Lockheed Martin, AstraZeneca, and D.R. Horton. First up, Lockheed Martin's second quarter operating profit plunged more than 60% after it reported pre-tax losses of $1.6 billion during the period. The company also cut its full-year guidance. Those losses tied to a classified program within the defense company's aeronautics segment. Lockheed called the charges, quote, "a necessary step" as it looks to improve program execution. Lockheed Martin CEO called out several catalysts for the year ahead in the earnings release, including more than $1 billion in missile-related contracts from the U.S. Army and additional satellite orders from the U.S. Space Force, but the shares down 8%. Next, AstraZeneca investing $50 billion in U.S. manufacturing by the end of the decade. The company is following the lead of many big pharma peers, which have pledged a combined $200 billion in spending over the next few years. The investments will include expansions of current sites in Maryland and Massachusetts, plus the construction of a new site in Virginia. AstraZeneca, which is based in the U.K., said it currently relies on the U.S. market for 42% of its revenue. The CEO telling Yahoo Finance he hopes to increase that U.S. market share to 50% of revenue with this move. And finally, homebuilder D.R. Horton's revenue topping estimates in the most recent quarter as buyer incentives sustained home sales during the 3-month period. Those incentives, though, they're not great for the bottom line. D.R. Horton, which is America's largest home builder by volume, lowered the range of its revenue outlook for the full year as macro pressures continue to weigh on the housing market. In an earnings release, D.R. Horton's executive chairman noted demand for new homes is under pressure due to, quote, ongoing affordability constraints and cautious consumer sentiment. And you can scan the QR code below to track the best and worst performing stocks with Yahoo Finance's trending tickers page. Well, stocks reached new record highs Monday, peaking at 6,336 for the S&P 500, over 21,000 for the Nasdaq. It's the latest in several record highs reached in recent weeks as stocks continue to power up. But are valuations getting too stretched, or does the rally still have more room to run? Let's bring in Willem Sells, HSBC Private Bank and Premier Wealth Global Chief Investment Officer. Willem, it's always good to see you. And this has been the question that we keep asking, and stocks keep going higher here. Is there anything that you see that is going to be a more meaningful obstacle?
Remain positive is the message you just talked about in the last 10, 15 minutes or so about resilience of the economy. And indeed, people have been looking at economic indicators, trying to, distill the messages. I think actually you should listen to the CEOs more to the economic data because, the economy is very confusing. There are consumers who front load, consumers who freeze, the same thing for the businesses. So the business messages out of the second quarter earnings season are quite positive, 81% positive surprises. We're only at the start, but clearly the qualitative messages, the wording that they are using are all positive, and that's reflected in the PMIs as well. They bottomed in April, but have been recovering in May and June, and we think that will continue supporting the equity market.
I think it's interesting, Willem, because in your latest 10 ideas that came out recently, you talked about having a multi-asset portfolio. So it sounds like even though you're relatively bullish on equities, that you still think people need to be sort of well-rounded just in case.
Yeah, I do think so that, it's always important to have also an income component and then a diversification element. The correlation between bonds, equities, and then, obviously equities and gold as well has become negative again. So bonds are good diversifiers. They're also at relatively attractive levels. I think the bond market is now digested the deficit issue, which there is clearly an issue, but it is digested. It has priced it in. You're compensated quite well from a real yield perspective, so the compensation over inflation, as well as the term premium, which is the money you get paid to take longer term risks. So it's good to have some bonds there. It's good to have some alternative assets as well. So we, clearly like, for example, infrastructure, which is an alternative asset that also is linked to inflation in case inflation is a bit stickier. To have those different profiles of assets that do well in different areas of the economic environment can really help solidify your portfolio.
Willem, do you think that both bonds and the equity market have also sort of digested this whole tariff back and forth? I mean, as we pointed out earlier, this headline from Treasury Secretary Bessent that he's meeting with Chinese counterparts next week, one would think that would have been more positive since China is the biggest deal that has yet to be done in detail. And yet it was barely a blip here. Why do you think that is, and what would need to happen to more meaningfully affect the equity market?
I think both in terms of the positive and the negative headlines on the tariffs, the market is getting less sensitive to it. And I do think that is number one because some of the deadlines get shifted, but also because people have had time and businesses have had time to start to at least adjust a little bit. They look for new suppliers, they look for new markets, they look for strategic acquisitions. You mentioned a company that is making a big investment in the US. So there are areas, ways that companies can try to start to deal with it. The uncertainty obviously is not gone completely, but if you couple that together with that economic resilience that you're having, I think it is logical that the market is getting less sensitive to every single headline.
At the same time, one of your other ideas is to continue to expect the unexpected. It's a delicate balancing act that we're talking about here, right? Because on the one hand, you do sound pretty constructive. The market has shrugged off a lot, but that doesn't mean it will continue to shrug off everything, right?
Exactly. And so, policy uncertainty is still high, and how indeed that economic data is going to evolve, how consumers exactly are going to react. And so therefore, we cannot predict everything. And so, it is very important to, I think, have an active approach. And usually you want to do an active approach, trying to predict things and positioning yourselves ahead of that. But even if you cannot predict, active management quite often, triggers opportunities. If you have a shock and good and bad stocks or companies that you like and others that you don't like, move in a similar fashion, it gives you an opportunity to pick up those stocks. It obviously also leads potentially to volatility spikes, which many investors are using to generate some income for the portfolio and so on. And obviously, the very fast money, for those of your listeners that have access to hedge funds and so on, they can take and tap into those opportunities as well. But yes, we remain optimistic. I think the technology sector, the AI, revolution is systematic, and is longer term. The Genius Act is positive for sentiment as well. We haven't talked about China. I think the supply chain, the supply picture there is going to change, where they're going to reduce overcapacity, therefore address the deflation problem. All of those are very positive structural and cyclical headlines. So people need to remain invested.
Willem, thanks so much. It's good to see you.
Great to have you.
Coming up on Yahoo Finance, opening bid, our executive editor, Brian Sozzi, joining us now with a little teaser, a little preview. What do you got going on?
Julie, we're going to spend 30 minutes talking about Coca-Cola. New cane sugar, no, but we will give it a shout out. Of course, Coca-Cola earnings out. Mixed results for them. I'm really focused on General Motors, Julie. When a company comes out and says we're going to see possibly a $5 billion profit because of Trump tariffs, it makes me take notice.
That makes sense. It's really interesting to see how tariffs are playing out across all of these earnings reports and the big differences that there are as well. Looking forward to that convo, Saz. That does it for Morning Brief. Much more ahead on Yahoo Finance.